Okay.
Well, welcome back to the show, and we'd like to say welcome to our guest this morning. Thank you for joining us.
Thank you for having me.
We'd like to officially welcome Nik Mohammed Zaki Nik Yusof, CEO of ASM Investment, who's here to talk to us about the importance of money management and financial planning. Good morning.
Morning. Thank you for having me.
It's our pleasure.
Theoretically, everybody knoes it's important to manage money.
Right.
But practically, and to actually put this stuff into practice, that's the hard part.
Correct.
So, what is the Malaysian scenario when it comes to saving money?
Okay, it's interesting what you mentioned before the break.
Right.
I think the frightening fact is that in the age group of 21 to 40, there's about 40 Malaysians that are declared bankrupt every day.
Wow.
So that's a very, very frightening fact.
And the civil servants are also part of this.
Yes, correct. It shows basically, especially in that age group, those are basically the people who just started working. There's still a lack of financial management and financial planning. So that's a scary fact, actually. Yeah.
So this lack of financial planning, the reason I mentioned civil servants is because they seem to be the easiest group to get loans. Everybody wants to give them loans.
Right.
So does that encourage unplanned spending or unwarranted spending?
I think civil servants basically, a lot of banks are targeting them because they are if you are in the civil service, basically you don't leave the civil service. So I think in terms of stability, it's very. They're there for very much for the period of their working life. But I think what's really lacking in terms of financial savviness is that there's basically a lack of education from when we are in secondary schools and whatnot until they reach working age. So I think a lot of them basically lack the financial planning skills too. I think there's also a lot of peer pressure in terms of everybody needs to have the latest gadgets. i4 is out, everybody's clamoring and lining up. If you see, you go to some of the stores and whatnot, everybody's lining up. You know, those sort of things.
I think it's almost you don't need the latest iPad. You know, we're using the older version here on the show. It still works fine.
Still works. Just as long as we can get through to the internet, that's the basic stuff.
Yeah,
just as long as you have a phone, that's the basic stuff. And we mentioned earlier also that a lot of people know that they have to manage their money, but it's a matter of if you can actually manage your own money. So how can you actually detect that you're falling into a loophole?
Okay. You definitely have fallen into the loophole if there's a big burly guy is knocking on your door and bringing a parang or something like that.
How do we make sure we don't get to that point?
All right, I think what you need to do is that let me talk about the signs that you're falling into that financial trap. Number one, I think if your salary is finished in half a month, then basically you know you're not saving money. Number two, if you're using savings, your own savings, instead of just using your salary for your monthly expenses or whatnot, you're digging it out from your savings. That means also that you are not financially planning.
Meaning you're spending more than you're making.
You're spending more than you're making, right? If you're paying your credit card bills, you're just paying the minimum amount every month. So that's another sign.
Okay.
You know, your house gets splashed in red. That's also another sign.
That's a big sign.
That's bad.
You know, so those sort of things.
Let's talk about credit cards. You were mentioning if you cannot pay your credit card bills, should we have a credit card in the first place?
I think a credit card is actually a good tool for, you know, you can actually use credit cards for financial planning. It's just that you have to know how to use it. There are some if you Google or if you go to the internet or whatnot, there's even when you want to use credit cards, there's a lot of advice on how you want to use it. You should have 3 credit cards, for example.
3 credit cards.
3 credit cards.
Okay.
1 you use for your normal expenses.
Okay.
2 you use for big purchases. 3 you keep only for emergencies.
Okay.
I know credit card companies are smiling right now.
3 credit cards.
I'm not for a credit card company, so you know. But you only use the one card, for your monthly expenses, and you make sure that you pay that particular card in full.
In full.
info.
Okay, so that's something we don't do.
Okay.
Now, let's look at some figures. It's scary to note how much household debt we have accumulated over the years.
Right.
So, is the ultimate goal to trim how much we owe? Should we pay off our debts faster? Or is debt also now part of financial management?
Obviously, at the end of the day, debt is not free. I mean, the banks are charging something,
Right.
and ultimately, I think you have to work yourself towards savings instead of being in debt. I think the thinking has always been a lot of the younger people. What they're doing is that you have your salaries, you spend, and whatever balance that you have, you save. The thinking should be, you get your salary, there's a certain amount that you should save every month, the balance of that you spend. So you have to reverse that sort of thinking, because I think at the end of the day, you have to be working towards a financial target. You're buying a house, or you're saving for your, eventually young people will get married, you'll have kids, you'll save for your children's education. So ultimately, savings have to play a part in your daily life.
Okay.
Yeah.
So what if you save and save and save, and suddenly some big events in your life happens? Say wedding,
All around the world,
marriage. You're gonna have to buy your first house,
Right.
or
a
something
double-dip recession.
totally unexpected, totally unexpected, like a crisis or an emergency where you have to use a lot of money, especially for health purposes. And what do you do then?
For health purposes, then you have insurance. Okay, I mean,
Okay.
that's part of financial planning.
So you have to remember to have
Yeah,
insurance.
yeah, you got to have insurance.
A lot of people don't
A lot of
actually.
people don't have insurance.
But for big ticket items, when you want to buy a house, when you want to buy a car, I think obviously debt is required. What we are trying to say, or what I'm trying to promote, is that it has to be, you have to take debt within manageable levels. It's got to be something that you'll be able to pay in 3 years or in 5 years. You at the end of the day, your for example, if a bank wants to give you a housing loan, I think at the end of the day, they want the repayment of the loan to be about 30% of your salary, something to that extent. Yeah.
I'm sure you followed the tabling of the budget
Right,
last Friday. So, was there anything in there for the average saver or the average spender?
The government servants are getting a big bonus, I mean, so there's more disposable income, so there should be more money to save.
More money to save. I like that you
should
mentioned
be
that.
more money to save. I think the government is also trying to encourage savings habits. For example, I think you see some tax breaks they're giving for REITs, real estate investment trusts. They're also giving some tax breaks for pension schemes. So those are, I think ultimately at the end of the day, what the government is aiming for is that when you retire, or when you're at that stage of your life that you're no longer working and earning a stable income, that you have something to sustain you.
Always when we look at financial problems, the banks seem to be the bad guys, and I think this is still true. When we look at the personal loans now, interest rates are really ridiculously quite low.
Right.
But who knows? In the next 5 years, the rates might go up again.
Right.
At the same time, savings, if you save your money in the bank, you only get a peanut of an interest
exactly,
rate.
yes, sure.
So where's the logic here? And is there a better tool of investment other than putting your money in fixed deposit?
Okay, what we'd like to encourage is that you should save regularly. So there are, for example, at ASM Investment, we do have certain schemes where you can put aside as little as 10 ringgit per month towards building building towards your children's education, or building towards your retirement. Those are habits that I think you have to inculcate. You have to have that discipline, basically, to put aside that amount every month, so that you can plan your big ticket purchase or whatever.
So looking back at the low interest rates in the banks, wouldn't this encourage people to take out more money?
Right.
Personal loans?
Banks are there to do business. I mean, as it is, I think the current interest rate environment is not only low in Malaysia, it's low regionally. So banks are there to make money, and obviously the retail sector is a very big area for the banks to focus on. So the banks are there. I've seen some banks actually sending you checks for you to bank in. I mean, you don't even have to fill an application form.
Wow.
But again, I think at the end of the day, it's your financial discipline on how you want to manage your own financial aspects. In terms of my advice is that if you should look back at what you're earning monthly, and you should focus back that out of what you're earning monthly, there should be a certain portion that you should say 20% or 10% or whatever. The balance is the portion that you should spend. So
there are also safe havens, some people claim. Precious metals,
gold,
property, this sort of thing. Are they really safe havens, first of all? And are there any other safe havens that we should consider in terms of prices?
All right. Basically, in today's environment where there's so much happening globally, I think in terms of people are looking at equity markets and the share market, but the share market all over the world is going through a lot of turbulence. So a lot of people are looking for the so-called safe havens, and gold seems to be very popular, especially among the ladies, and it's an excellent store of value, and I think some of the banks are actually providing retail gold purchases, where you can buy small gold bars. In Malaysia, I think properties is also a good investment, and of course, unit trusts. Unit trusts are basically it is provided you put it in a selected fund, in funds that are stable. I think at the end of the day, you're putting aside some money for savings, and also you get the potential of growth and dividends.
Right. Well, thank you very much for sharing with us this morning. It's been a pleasure having you.
Thank you so much.